Hello again, guys. Right, there's a little trade in here. I've had to go out and do the horses since this trade, and a bit of shopping and see my mother and things like that. But that tiny little move there on this gold chart represents 24 pips net of spread. This whole move here, I'm sure you're probably aware, but you know, you might watch this in months' time, or might have not seen my thread or whatever. That whole move there in gold, because of the coronavirus, is 684 pips. So what I want to do here is show you why I can't get into this long trade based on just based on this, what I call my 3 candle reversal. Because on the 5-minute chart, let's have a look at that. What we have is a reversal here. That's an inside bar, the green candle. So we can go high, low, lower high, lower low. That's high, low, lower high, the green, lower high, and then the red lower low. And now we can sing the other song: low, high, higher, low, higher, high, and break of resistance. So to all intents and purposes, this is a perfectly good consideration to the long side. Why I don't like it is it's so far away from this hourly 8 EMA, the 96 on the 5-minute. You know, we're way overextended anyway, in my opinion. I've taken off the sweet spot and the sweet spot gold indicator and a lot of the other rubbish on here, and the SS support and resistance, in order to be able to see what we're looking at clearly. Now, what else can I say about this? This is high and resistance, low, lower high, and a lower low, and a lower high, and a lower low. So we've got very, very strong downward move here. And while we're here, it's also important to, and this is slightly different off subject now, I mean, the only way I could take this long is just to trade to the internal highs of that. So let's have a look at the 5-minute again. The nearest resistance, all these levels are resistance here. That high is resistance. That high is resistance, the next lower high. So all these are going to cause a problem, and that lower high there are all going to cause a problem to my trade. So it's a complete mess. The biggest gap I've got here is once we close above this level here, that 154427. So we can see the gap between there. We'll go down to the back down to the 1-minute again now, and you can see that 27 level there, 4427, and it's still a very good profit target there, 51 pips. I mean, it's mad how gold is moving. So ideally you want to see a low, a high, higher low, higher high, and we want the higher high. So if we go higher up and break this one and close above it on the 5-minute chart, we can then wait for a pullback and consider going long. That's the way I understand trend analysis. Now you can clearly see as well, you've got 3 swings now: high, low, lower high, lower low. Swing 4 is all of this, and swing 5, where the entry is considered, is this thing here, and that would be where I want to enter. So I didn't intend to do the analysis in the opposite direction when I said when I decided to do this video, but I shall do. So we have support at the bottom of the green candle, support at the bottom of this green candle, and we've got some resistance over here. Looks like the red candle's high is the highest resistance. So we have now got a gap between this support, the green line, and the next resistance below us and support is way below that, 113 pips. We've also got a higher, lower, lower, higher, lower, low, and a close. This represents the pullback. So this is a better option to go short than it is long now, in my opinion. So I would probably, if I wasn't stacked up to the nines with positive pips, I would probably consider shorting this, and if I wasn't making the video. And what would I do to consider? Actually, that's an M15, so that's even better. We can go to the M5 in terms of strength. I mean, we can go to the M5, and now we need to just double check our supports below us, and we have got a support there. Remember, support is always in the up move. These supports are minor to that support over here because they're part of this downswing now. So I hope that makes sense. So and also remember, now we can do the swing trend song: high, low, lower, high. We expect this to go create swing 3, which would mean it'd have to be below there. And so it is even higher probability that swing 3 is on the cards here. So there's a lot of discrepancy, if you like, here as to which way the price will go now. They're just playing games, in other words. But I suppose you could. The only thing, again, another thing to bring to your attention is that there is no divergence in this high. So the power is still to the long side. And let's have a look at the 1 minute and see what that tells us. The 1 minute, we did have a bit of divergence there on the 1 minute actually, but really that only pertains or applies to that first move down. Sorry, this is messing around. High, higher high, lower high, and as you can see, Harry hindsight glasses are brilliant, but there was a good 142 pip move there. Absolutely mental. Excuse my French. The way this gold is moving at the moment. So we're in no man's land here. It's a dangerous trade. We can start to add some ascending and descending trend lines. That one can't be added yet because technically it hasn't broken these lows. May well have on the line chart, which would make a big difference. Not really by the looks of it. Let's just quickly stick that on there. No, it hasn't. So hopefully, doesn't really tell you a lot about trading, but it tells you how I analyze the charts and stuff. We've got another ascending trend line now, valid one. We can connect two low and a higher low that make a series of higher highs. Swing 3, swing 1, swing 2, swing 3. So this technically is swing 4 in the potential swing up now. But remember, the higher time frame or the larger swings take precedence, so this is still swing 4 for this. The whole of this is swing 4, swing 1, 2, 3, 4 for the down move. So the down move has got trumps the up move, and if we traded this now, what you want to do is trade the break of that low there be safe. Not that low there, because remember this is only swing 1, that's now swing 2, swing 3, but we're going back to the old the original one. I said this takes precedence, swing 1, 2, and this potentially is swing 3, the break through that low there, which is on that red candle there. So this is the sort of precision that I go to actually assess my charts. It's all about the candlesticks, and if you look at these candlestick trends, 3 candles represents a trend on, say for example, the 15-minute. The clearest way to see the trend, the internals of these candles, is to look at that candle there, that candle there, and that candle, the red candle hiding behind all that mess. And you can sing low, high, higher, low, higher, high, and then the green high, low, lower, high, lower, low. And if we go on the 1 minute, this is swing 1, swing 2, swing 3, swing 4, swing 5. That would have been the entry for the long, and you can sing the low, high, higher, low, higher, high. Old resistance acts as support here, and that's where the price goes up. That's the internals of those 15-minute candles. And then you've got the high, the lower high, the lower low. That's the internal of the 2 15-minute candles to the downside. Hopefully that does make some sense to you. That's the difference between a swing trend and a candlestick trend. Candlestick trend needs to be a divisor of 5 or 6. So an M30 candlestick trend, you should be able to see the internals on a 5-minute chart. Swing 1, swing 2, swing 3, swing 1, swing 2. And we've got no swing 3, which I've been talking about all through this video. And doesn't have to make swing 3, but you realise that I've traded the swing trades, or studied them for 15 years, and then I devised my candlestick and the way to view the trends on the higher time frames just by looking at the candlesticks and just by doing that little song. Okay, this now looks like it's building up momentum again, so this looks like a valid long trade again now, because you know, we're above there anyway, so the longs were always the safest trade to take based on this massive up move here. And we could just draw a couple of ascending trend lines as well. But as I said, we're overextended, so I wouldn't want to be into this trade, but this is the sort of analysis I do when we're down here, say for example, and I know I've got a lot of room to the upside. So, and you can see the difference, massive momentum here, and not a lot here, so it's very dangerous. Good time to be looking for shorts, to be honest with you. So if this turns red and that turned red, and then we did the trend analysis, then selling would be the safest bet. So you may need to watch this 5 or 6 times, but I hope it helps a little bit. Thanks for watching and have a good evening. It's now 4 o'clock in the afternoon here in the UK.